All right, YouTube, welcome back. I was hoping to show everybody my brand new Fidelity portfolio, but I guess that Robinhood's got a flood of transfer orders and they're just not getting to them as quickly. So instead, we're going to talk about 3 stocks to watch on this latest pullback going into March and what I have my eye on and what I'm thinking about investing my money in. So hang around, let's talk about those stocks and we'll get into the video. All right, everyone, by now you know the drill. Go ahead and click that like and subscribe button down below. Also have links in the description. That's going to be your Webull, your M1 Finance, and your Coinbase. Don't forget your free stocks, your free money. It helps both of us out. Go ahead and click those down below. Get started on your own financial journey today. So this last week in the stock market's been a little down for everybody. It's had a little bit of a pullback going into the first week of March. And for someone like us that's dividend investing, that's a good thing. That's a buying opportunity. So I want to go over 3 stocks that I've got my eye on for this month and see what we can do to hopefully lower our cost basis or jump into some stocks that we may not normally buy into. And the first stock we're going to talk about is Old Faithful, and that's AT&T. At closing, as of right now, I believe it's right around $28 and maybe 20 cents per stock. AT&T, of course, has that great dividend yield around 7%. And right now you're getting it at a lower cost basis than it kind of has been. It's been sitting around fluctuating between the $28.50 to $29.50. It kind of goes up and down. And we've seen AT&T dip a little bit on the news that they spent $23 billion more on the 5G spectrum auction. And that's going to, of course, increase their 5G network going forward. And, of course, all the telecommunications companies, obviously need this to keep pace. But with AT&T's debt load and just adding to that, is pretty tough, and it actually got downgraded by a few investment firms. So adding that extra debt when their books already weren't great, easily kind of is making that stock drop a little bit more. But I think that also grants us a great entry point for some more AT&T. My cost basis is right around $28, so I'm hoping that it goes lower because I want to buy more of it. AT&T is one of those stocks I'm trying to get to 100 shares and run the wheel strategy on. I think I'm at 55 shares right now. So anything I can do to increase my position in AT&T, I'm going to do it. Again, 7% dividend yield. And, getting to 100 shares of AT&T is basically grabbing you $50 or so every single quarter. Just an easily reinvestment, buy you more shares of AT&T. It's just going to keep running that up. And that's how you really get that snowball going. That'll be on autopilot at that point. Once I reach those 100 shares, I probably wouldn't buy anymore, and I would just let AT&T work for me, buying new shares every single quarter. Of course, they also had the news that they sold off a portion of DirecTV, I believe, for $18 billion, which was, pennies on the dollar for what they bought it for. And, all these things kind of add up. It's driving that AT&T price down, but I'm going to go get me some more. And the next stock I want to talk to everybody about is Proctor Gamble. Procter & Gamble is a huge umbrella company that holds some of your most famous brands that you can think of off the top of your head. We'll go through a few here in a second. But as of right now, they're down almost 10% over the last 3 months. And it seems like it's just kind of, trickling on down. Again, that's a buying opportunity for us. Being able to grab a quality stock at a lower price than what you bought it for is kind of the name of the game here. As you catch these things going down, then when they do rebound, that's kind of how you maximize your growth potential out of these dividend stocks. You're going to get your dividend yield returns, but as far as dividend stocks and these blue chip quality stocks in general, they're not going to grow at an exponential rate like an Apple or a Tesla. So you kind of need to buy these dips. I mean, there's a reason that's a phrase, right? Buy the dip. You want to try to catch it at a lower cost basis and then let it ride. Dips a little bit lower, let it ride a little bit more. And it's a slow growth process, but along with those dividends really kind of begins to get that snowball going if you're catching it in the right times. Let's take a look at some of the Procter & Gamble brands here that we all know. I mean, top of your head, you look at the diapers, Pampers, Loves, Bounce Fabric, Downy, Gain, Tide. Literally everything that you use, in your household is probably made by Procter & Gamble. Tampax, for you ladies out there, Gillette for the guys. Anything you can possibly think of. Old Spice, Pantene, Cascade for your dishwasher, Febreze for those of you that stink and have a nasty house. Crest and Scope for your mouths. Literally anything that you can think of. Pepto-Bismol. Procter & Gamble's not going anywhere, and it's a great company that has so many name brands that, I mean, anytime you can get into Procter Gamble is good, but if you can get in at 10% less than what it has been trading for, you got to buy that dip, and hopefully that it keeps continuing to grow. And with the dividends on top of that, it makes it a very solid play. And that third stock we're going to talk about is everyone's favorite right now. It's Johnson & Johnson. Of course, the big news over the weekend is that the FDA has approved their single jab COVID vaccine. Obviously not as effective as the Pfizer or the Moderna vaccines, but with J&J, they have the ability to really mass produce this thing and get it out to more people faster. If you look into some of the specifics about it, it can transport at a much higher temperature than, say, the Pfizer or the Moderna, where you need special refrigeration and special containers to hold this stuff. Where J&J is a little more feasible to get out into the country and be able to vaccinate everybody. Hopefully, get us opening back up and get us back to a normal life. So I'm expecting to see a big J&J bump, much like we saw with Pfizer. Pfizer, of course, has really come down recently, and you can almost call them the fourth stock. Pfizer has really taken a dip. I'll pull them up real quick right here. Let's take a look at Pfizer while we're talking about Johnson & Johnson. And right now, over the last, we'll call it 3 months, Pfizer's down almost 9%, which is incredible as they were like the leader with the COVID vaccines. They did spike out when they came out with it, so I'm expecting Johnson & Johnson to have a little bit of a boost coming forward. Maybe it kind of spurs the market this week. So maybe you want to jump in on some of these stocks early before the market takes off, knowing that a mass-produced vaccine can really kind of come out and hopefully inoculate the country, get us back to normal. Even without the vaccine, Johnson & Johnson's always a good dividend play. I mean, they again, just like Procter Gamble, they have so many brands that it's just a solid dividend blue chip stock, a dividend king. So you can't go wrong with Johnson & Johnson, but now that the vaccine is here, that they're going to mass produce and send out, Johnson & Johnson, get your vaccine. I've got mine. I'm lucky enough to work in healthcare where I was one of the first to have the opportunity. Get your vaccines, be safe, do the right thing, and then go get you some Johnson & Johnson. And that'll wrap it up for today. We talked about 4 stocks with Pfizer of things I'm watching for this month and good plays. Remember, I'm not a financial advisor. These are just things that I'm looking at that I might want to invest my money into. So I hope everybody has a great week. I hope you put your money in a good, safe spot into some good blue chip stocks. And next week we'll be going over all the dividend stocks I received in February, so be keeping an eye out on that. And hopefully see you then.